Happy February, people. I hope this finds you healthy and well. Market's pretty wild right now, all over the place, pretty roller coaster like. So let's talk about what's going on. And I really think this is going to be a year of the I's, the letter I. Let's talk about it. The first and the biggest I is inflation. Hot button word for the last 6 months, but this is what's going to lead to a super volatile year. As the Fed tries to get control of this inflation, which was kicked off by the crazy COVID funds pumped into the economy, the Fed knows that they have control and they need to squash this out. And to do so, they're going to use the interest rate to cool consumer spending off and try and get this inflation under control. That brings us to our second I, which is the interest rates. Now, if you haven't heard, the rate this time last year was about half of what it is today. As of today, the rate's about 6.8%. Now, I think the most frustrating part for these interest rates is the volatility of them. Now, we hit our peak in October at right at about 7%, and at the beginning of this year, we got down to just under 6%. So it took about 3 months for that interest rate to crawl, take the stairs down 1 percentage point, right? Fast forward to today, it's been about 2 weeks and the interest rate has gone up nearly a full percentage. So we're close to 7% again. We're at about 6.8% today. So it took 3 months to go down 1 percentage point, but it took only 2 weeks to go up. So the interest rate takes the stairs down, but the elevator up. So this is what's super frustrating, especially for buyers, right? They have a rate that's attractive and that they can afford, and then seemingly overnight, their rate is up and now their payment is almost $250 more. That's about the difference in a percentage point on a $500,000 house. So as you can see too, on the sell side, right, it affects sales as well. Because you have to remember, new listings is a sign of demand, right? A seller's not going to sell to be homeless. They need somewhere to go and they need some incentive, right? If they bought in the last 3 years, they've got a significantly lower rate than there is today. So why would they move to double their interest rate, right? Sure, they can use some equity to offset those costs. But again, it needs to be attractive. The lower that rate goes, the more inventory there is, but the more buyers there are. So it's kind of that double-edged sword. The third I is inventory. Mentioned it briefly with interest rates, but we're still at all-time lows. Now, if you're reading the headlines, you can see that inventory is up 247% from last year, which is a big percentage, but you have to remember we're working from all-time lows. Anything related or compared to COVID numbers is going to seem astronomical because again, we're coming from the lowest of the low, so any growth is going to seem more significant than it is in actuality. So again, at the end of the year, we had just over 4,100 homes on the market. We actually saw that number go down by about 650 houses. So we saw active inventory decrease by 12% coming into the new year, which is not healthy. That's not what we need. Really, the only thing to get this thing to level out, aside from interest rates, is inventory. We need more houses. We're up from last year, but we're still 3.5 times lower than the average amount of listings on the market at this time of year. So again, inventory is going to be an issue for the foreseeable future, and that's going to keep prices right where they're at. We might see some ebbs and flows by a percent or two, but again, because of that inventory, as soon as those rates tick down, right, buyers are going to hop in and the inventory is going to be limited. And as those buyers pile up, it's going to put upward pressure on prices. And that's what we're going to see. So because of the limited inventory, as rates get lower, upward prices, but then as the rates go up and demand cools, those prices are going to level out, maybe even drop a little bit. So we're going to see a lot of this year. What does this mean for buyers? Buyers, if you can afford it, you should jump in. Even if you can't afford it and you're in the market, it doesn't necessarily mean you're going to find something you like. So you should start the process earlier than you think, so that you can give yourself ample time. That's the other thing that's nice about this market is, sure, the interest rate is higher, which affects affordability, but you've got time, right? Remember, this is the biggest purchase of your life, more than likely. So it's great to have time to think and to research and do your actual due diligence, right? Back in the COVID days, as soon as we left a house, there's a good chance you had to submit an offer then and there or you wouldn't have a chance. But now you can see places, you can sleep on it, maybe even see a place twice, right? Which is huge, again, when making a big decision. But also the inspection, you can have a full inspection, you can ask for things, and they might get done, right? A lot of people were waiving inspections last year, which is absolutely insane, but that's what it took to win a house. So look at the silver lining. Again, you'll have time and you'll be more comfortable making this big purchase. It might cost you a little bit more, but at the end of the day, it's going to be worth it. Sellers, you need to be mindful of this affordability issue, okay? The COVID days are over. That gold rush where you could list the house and expect to get 100K more for it, those are over, okay? You need to properly prep and price your home, all right? What that means is clean, declutter, repaint, do the little things that buyers are looking for, okay? Buyers out there, again, it's more expensive for them, so they're going to be super picky. They need to walk through a house and think they don't need to do a thing, okay? They need to walk through your house and they need to fall in love. So whatever it takes to prep that, talk to me. I'll walk you through what should be done to get it show ready and show it in the best light possible. But at the end of the day, you have to remember your price is your biggest marketing tool. If that price is off, this day and age with the internet, buyers are going to know and they won't even come check it out. So get people in the door and make them fall in love. Again, this year is going to be one of ups and downs. It's going to change monthly, weekly, maybe even daily. So if you're thinking about hopping in the market for whatever reason, please reach out before you get the ball rolling. I'll update you on what's happening in the market so I can get you as educated as possible so you can make the best decisions possible. No question is too small. Call, text, email me, and I hope to see you soon.